Up first here, New York digital media company, the latest to add Bitcoin to its balance sheet. Townsquare Media, a digital marketing and radio station company based in New York, has decided to back the original cryptocurrency by adding $5 million worth of Bitcoin to its balance sheet. According to a recent filing with the United States Securities and Exchange Commission, Townsquare Media has purchased Bitcoin. This information was first brought to light by Macroscope, a Twitter account that focuses on institutional trading. The company filed a report saying it had invested $5 million into Bitcoin during the first quarter of 2021. In the document, it said that it believed in the long-term potential of digital assets and may buy or sell them at any time depending on market conditions. Here is the tweet out from Macroscope about what they said about that. The price of Bitcoin at the time of purchase wasn't disclosed, but Townsquare said it recorded an impairment loss of $400,000, resulting from changes to the fair value of its digital asset holdings over the quarter. In a recent financial report, Townsquare Media revealed that it had lost $2.5 million in the first 3 months of the year. The loss is said to be from the company's investment in Bitcoin. However, this number is not as bad as it seems because Bitcoin is seen as a liquid asset. This means it can be easily sold for cash on a crypto exchange. While the purchase is small in comparison to MicroStrategy's nearly $3 billion stash worth of Bitcoin, Townsquare Media is around the middle of the list in terms of amount of the crypto held by publicly traded companies. So some companies are, hold a lot of Bitcoin, the majority don't. There's some that are just getting into it. This seems to be, one of them that has, like they said, a middle standing. But it just is cool for Bitcoin. Hopefully, more companies start to adopt it, especially in this bear market. According to Bitcoin Treasuries, a site that measures Bitcoin held by companies, Townsquare would sit somewhere around the Bitcoin mining companies CleanSpark Inc., which holds around $4.3 million, and Cathedra Bitcoin Inc., which holds just over $5 million worth of Bitcoin. Bitcoin's price has been sliding this year, reaching 10-month lows. This has resulted in losses for companies with big positions in cryptocurrency. Cryptocurrency investment manager Galaxy Digital Holdings recently reported a $111.7 million loss in the first quarter of 2022. This was due to unrealized losses on its cryptocurrency portfolio. MicroStrategy CEO and Bitcoin advocate Michael Saylor also had to assure investors that the company could cover its debts if asked due to a Bitcoin-backed $205 million loan that it took out in March. So, just some updates on who is getting into crypto at this point. Up next, chairs from the SEC and CFTC talk crypto regulations at ISDA meeting. More and more crypto regulations are coming. Make sure you're doing everything legit, how you should. As of the current regulation, you should be fine. This annual meeting of the International Swaps and Derivatives Association, ISDA, began Wednesday in Madrid. The United States Securities and Exchange Commission Chairman Gary Gensler and U.S. Commodities Futures Trading Commission Chairman Rostin Behnam will both be featured as keynote speakers at the event, with Behnam speaking at the morning session and Gensler in the afternoon. Behnam spoke about a request for an amended order of registration as a derivatives clearing organization. The entity seeking to offer non-intermediate clearing of margin products to retail participants was transparently a reference to FTX US's request. The CFTC is hosting a roundtable later this month to discuss the potential impacts of blockchain on the futures market. According to J. Christopher Giancarlo, chairman of the CFTC, other registered businesses have expressed an interest in exploring this new technology. He added that it's important to be transparent and allow the public to provide input. FTX CEO Sam Bankman-Fried may have been listening as Behnam spoke, as Bankman-Fried was present at the conference and participated in a fireside chat a few hours later. Behnam testified before the Senate in February and said that he would advocate for and support the CFTC's ability to develop a regulatory framework for cash digital assets. Currently, the CFTC only regulates derivatives markets. However, it has occasionally exercised its enforcement authority over cash markets. For example, it fined Coinbase for improper reporting of exchange volume and self-trading in 2021. So, they have some rule over certain areas. Again, regulation in this space is so hard because things are always changing. Gensler briefly touched upon the topic of crypto assets and derivatives during his speech. He stated that if a platform offers security-based swaps, it must comply with U.S. securities law. Gensler stressed the need for the ISDA to recognize that if the underlying asset is a security, the derivative must comply with securities regulations as it develops legal standards for crypto derivatives. So I'm sure we'll hear more about that to come in terms of, what these regulations are, what the legal standards are as more and more people adopt crypto. And up next here, 5 state regulators allege organization is tied to Russia, scamming users using a metaverse casino. Authorities in the U.S. states of Alabama, Kentucky, New Jersey, Texas, and Wisconsin have filed enforcement actions against the Flamingo Casino Club for allegedly perpetrating a scam through NFTs tied to a metaverse casino. Several state agencies allege that the Flamingo Casino Club has been fraudulently selling security tokens it claims represent ownership rights in a casino in the metaverse. The organization is said to have solicited investors directly through social media, recruiting influencers to promote token sales for the casino. The state authorities allege that the Flamingo Casino Club began operating in Russia in March 2022 and made a false claim of being partnered with the Flamingo Las Vegas. In addition, the enforcement actions accuse the Flamingo Casino Club of deception and fraud for claiming partnerships with Yahoo and MarketWatch. The 5 state regulators say that the Flamingo Casino Club is not only hiding its connection to Russia, but is also using phony addresses and contact information, as well as concealing other important details about its business. The regulators allege that the casino is buying land from Snoop Dogg, but is not being transparent about its finances or operations. Pretty interesting. Iman Javers did a tweet out about this here. Flamingo Casino Club allegedly said that NFTs would allow users to participate in drawings and lotteries for prizes like Tesla vehicles, iPhones, and cash. However, CNBC reported on Wednesday that the organization's use of funds was false. Texas State Securities Board Enforcement Director Joe Rotunda said that the donations from NFT sales to war victims in Ukraine were false. Sad. Saying that they're giving to a country in need and not. The 5 authorities have issued a statement reminding individuals that the same rules that apply to investments in the physical world also apply to investments in virtual worlds. They caution that just because someone uses a fake name or doesn't have any experience doesn't mean that there aren't real risks involved with investing money in scams. The Flamingo Casino Club began minting NFTs on April 12th, as per its website. As of publication, the site displayed artwork showing the Flamingo Las Vegas Hotel and Casino and said that the project was in the process of acquiring land for the Flamingo Club Casino. So do some research on that. Let me know what you guys think. There is a lot of scammers in the space. There's also a lot of legit projects and people that are trying to, make a name for themselves. And some of these legit companies are accused of being scammed. So I don't know, I don't know much about them. Do your own research. Let me know what you guys think. Up next here, Latin America's largest digital bank will allocate 1% to BTC, offer crypto investment services. Nubank, the largest digital bank in Brazil and Latin America, announced that it partnered with Paxos to allow customers to buy, sell, and store cryptocurrencies directly through Nubank. Nubank recently announced that they are launching a new cryptocurrency transaction service. They will also be allocating about 1% of their net assets to Bitcoin through New Holdings, a company that controls the Nubank Group. Nubank said that this move reinforces the company's conviction in Bitcoin's current and future potential in disrupting financial services in the region. Nubank has announced that they will allow their customers to purchase Bitcoin and Ethereum from May, starting at just 20 cents per coin. The crypto investment service will be fully implemented by the end of June. Cryptocurrencies are a growing trend in Latin America, explained Nubank founder and CEO David Velez. The company has been following the market closely and believes that there is a transformational potential in the region. That is really cool. You know, I always love when these other countries start to adopt crypto or Bitcoin, and get it out to their residents, have other people, average people get used to crypto. I think it's huge. Nubank announced their plans to integrate cryptocurrencies into their app. This will make it easier for customers to buy, hold, and sell digital currencies without having to open new accounts or transfer any cash. That is pretty cool. The company has plans to expand beyond BTC and ETH in the future, but didn't elaborate on which assets will be included. Paxos will provide a set of APIs to enable Nubank to offer crypto-enabled services to customers. This is in line with what Mercado Libre and PayPal have done, partnering with Paxos. Nubank is said to have more than 50 million customers in Brazil. According to Paxos, its partnership with the digital bank represents an important strategic move as Latin America continues to grow into a crypto hub. Absolutely, Cointelegraph here tweeted about it. Nubank is not new to the digital asset scene. The bank has been offering customers the ability to invest in funds with exposure to the digital asset market since 2020 when it acquired Easy Invest. Nubank has acquired a Bitcoin-related company, QBTC11. This company offers an exchange-traded fund that is 100% allocated to Bitcoin, managed by QR Asset Management and belonging to the QR Capital Group. Meanwhile, a securities filing earlier this year revealed that Warren Buffett's Berkshire Hathaway had purchased $1 billion in Nubank shares in the fourth quarter of 2021. The move is said to have given the Oracle of Omaha indirect exposure to the digital asset market. I'm going to pause there because we just read an article about Warren Buffett being totally against Bitcoin, right? And then his company is purchasing money in it. I honestly think some of these big names say things to make the price drop and then they can get in more. I've seen it happen a lot. Another Brazilian bank, BTG Pactual, is also looking to offer Bitcoin investment services to its customers. The bank's president, Roberto Sallouti, recently announced that the bank will launch its own crypto exchange in roughly 2 months. So if you're living in Latin America, Brazil, something good to note if you're into crypto. Up next here, FTX US applies for trust charter in New York. FTX US, a crypto exchange, has applied to the New York Department of Financial Services for a trust order in order to operate in the state of New York. In an announcement, FTX US said it had applied to form a limited purpose trust company with New York's financial services regulator in order to offer its products and services to local users. Pending regulatory review and approval, the licensed trust will be run by Fidelity Investments veteran Marissa McDonald. McDonald will serve as the trust's chief compliance officer. Cryptocurrency firms looking to operate in New York State have 2 different paths to regulatory approval. One is to apply for a trust charter, as Coinbase and BitGo have done, in order to offer custody services. The other is to apply for a BIT license, a route made available since 2015. According to the NYDFS, the BIT license is meant to provide a well-regulated way for New Yorkers to access the virtual currency marketplace. However, New York City Mayor Eric Adams criticized the initiative in April, saying that requiring crypto firms to apply for a license makes the state less competitive. You know, that there's something to be said about that, right? If it's harder to operate in a certain state, will companies try to do that? I mean, it's New York. It's a big state. I think, for them, the returns they'd see for having to go through these extra steps probably would be worth it. Cointelegraph has recently reported that FTX US reached an $8 billion valuation following a $400 million funding round. FTX's global exchange followed with its own $400 million raise later that month, raising its valuation to $32 billion. And yeah, so if you're in New York, something good to note. And last but not least here, some more on Bitcoin price. Bitcoin fights to hold 29K as fear of regulation and Terra's UST implosion hit crypto hard. Bitcoin price initially bounced from its recent low at $29,000, but the overall market sentiment after a 25% price drop in 5 days is still largely negative. Currently, the Crypto Fear and Greed Index has plunged to its lowest level since March 2020, and at the moment, there appears to be little protecting the market against further downside. Regulation is still a major concern for markets, and it's clear that investors are being cautious with high volatility assets. Earlier this week, United States Secretary of the Treasury Janet Yellen called for a regulatory framework on stablecoins and specifically addressed the Terra USD or UST stablecoin plunging below 70 cents. Further, the United Kingdom introduced 2 bills aimed at regulating crypto: the Financial Services and Markets Bill and the Economic Crime and Corporate Transparency Bill will help to strengthen the country's financial services industry, including supporting the adoption of cryptocurrencies. That's good to know for all of us here involved in crypto. I think, again, like I've said before, sometimes regulations can be good. They can help people feel like they in government have a better grasp on crypto. Sometimes they can be bad because people who are making these regulations don't know enough about it. So, time will tell. Meanwhile, Bitcoin and crypto are seeing a drop in public interest as reflected by the number of Google searches. This could explain why Bitcoin is 56% below its $69,000 all-time high. The top traders' long to short net ratio helps traders understand if professionals are bullish or bearish. It looks at the positions on the spot, perpetual, and futures contracts. This provides a more detailed analysis of trader sentiment. Bitcoin's price has been on the rise since it hit a low of $29,000 on May 11th, as indicated by the long to short indicator. However, professional traders have not increased their bullish bets, as indicated by the decrease in the top traders ratio from 1.20 to 1.00. Further, research shows that Binance data indicates that the majority of traders are not buying into the 5% price recovery, remaining near 1.10. Similarly, data from Huobi shows that the top traders have a long to short ratio of 0.97, indicating little demand for leverage buys. The crypto market structure has deteriorated as evidenced by the CME's Bitcoin futures contracts premium. The metric compares longer-term futures contracts and the traditional spot market price. In healthy markets, 1-month futures contracts should trade at a 0.5% to 1% premium, as this reflects the added value of sellers being willing to withhold settlement for a longer period of time. This is known as contango. Whenever the indicator fades or turns negative, backwardation, it is an alarming red flag because it indicates that bearish sentiment is present. And here are some of the exchange top traders Bitcoin long to short ratios from CoinGlass. You can see that here. The chart shows how the indicator entered backwardation on May 10th. This move marked the lowest reading in 2 months at a negative 0.4% premium. Data shows that institutional traders are below the neutral threshold measured by the futures basis, and this points to the formation of a bearish market structure. Furthermore, the top traders long to short data does not show much appetite for Bitcoin, even after its quick price recovery. The fact that the Bitcoin price is now trading near the same level is also concerning. Unless the derivatives metrics show some improvement, the odds of further price correction remain high. So, some update on Bitcoin as always. That's all we have for you today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell. We enjoy reading all of your comments, so make sure to leave a comment below on what you think about the market, any opinion you have, what you want to see in another video, and we'll see you next time.